Hello, accounting students. Today we're going to be looking at the journal. Sometimes it's referred to as the general journal. Later, we're also going to learn how certain ledger accounts can also have their own journal, so there are specialized journals as well. Basically, the journal is exactly what it sounds. It's a daily record of each transaction as they occur. To give it some context, currently we are focusing on T accounts, which most closely aligns with the idea of posting entries to individual ledger accounts. So rather than looking at a transaction as kind of one entity by itself, we are taking all the little individual pieces like the accounts and the amounts, and we are pushing them out to the different T accounts that are responsible for maintaining their balance. We have been looking at a high level how transactions occur. We're going to be looking at that in more detail in chapter 6 as well. But the part that we've been missing is this idea of journalizing the entries. So as I said, we kind of split up all the little pieces of transactions when we post them to their ledger accounts. The purpose of the journal is to keep all those little pieces together in one place as transactions occur. And so officially, the journal, by definition, is the book in which accounting entries for all transactions are first recorded before being recorded to the ledger accounts or posted, as it's also known. With ledger accounts, as I mentioned, the balances, the balance entries all get split up into little separate pieces. And so we can't see all these pieces in one place. And we can't see that, more importantly, whether or not each entry is balanced, that we have equal amounts of debits and credits. And so the journal allows us to keep all those parts in one place and allows us to make sure they're balanced before we go and change things to the T accounts or the ledgers. So basically, we keep all the details of each entry together in one place. The journal is completed transaction by transaction. And so that also implies that it is done in chronological order. It is as transactions occur. It's a continuous record from the moment the business opens until it finally closes. And it is often called the document of original record. So this is kind of a sort of a graphic of what a general journal page will look like. It's at the top. So we have obviously the document title. We have a space for the page number. We have our debit and credit columns. We have our posting reference, which we're going to learn about in PR, posting reference, which we're going to learn about in chapter 7. We have a particulars column where we keep track of the accounts and brief descriptions of the entries. And then we have a double date column here that we're going to look at in a minute. So those are the parts of the general journal. And so basically, each journal entry records all the accounting changes or details for one transaction. Very, very important that we follow this guideline. When we analyze a transaction for the accounts and amounts, what we also have to keep in mind now, in addition, is that we are planning or will have to plan that to list all the debit accounts and amounts first, and then all the credit accounts and amounts afterwards for each transaction. So don't worry too much about the details. We'll see how it works, but it's a very, very important convention that we have to follow. Now, we should know that we will need to have at least one debit account and one credit account to balance, like one of each. And obviously the amounts, we have to make sure that they equal out as well. And so finally then, journalizing is simply the process of recording entries into the journal. So these next two slides kind of cover the details of how we actually journalize an entry. And so I'm going to go into this only in high level because we're going to do it in detail in the guided practice. So at the top, we're going to record the page number. Please note that we only ever use page 1 when we are beginning operations of a business for the very, very, very first time. So if a transaction says this is the first entry for the business or the business is opening, then you would use page number 1. Otherwise, you will always record a consecutive page number or make one up for all of your work. Usually a page number will be given. If not, you can use any number you want, literally, except for page one, unless it actually is telling you that this is the first entry for the business. We are next going to record the date, and there's a little bit of a process around that that we're going to look at in terms of the year, month, and date. Certain information doesn't get repeated with every transaction, so we have to follow that. So we'll see how that works. Next thing we're going to do is to list the names of the accounts to be debited in the particulars column. These are going to be left justified, and then the amounts for those debit accounts are going to go in the debit column. The next thing we're going to do is list each of the credit accounts. They are going to be indented slightly in the particulars column. And again, we'll see how that works. We will then list the dollar amounts in the credit column. And then we will write a brief explanation for the journal entry in the particulars column. The last thing we do always is make sure that our debits and our credits balance. If they do not, we must not move ahead or leave it alone. So basically, the usefulness of the general journal is really important. Not only does it provide a continuous record of all the entries, but it's also chronological. This means that if something occurs or something goes wrong, we can use it as a reference. All we need is one little piece of information like an account or a date or whatever, and we can go back and we can see all the parts that relate to a transaction. And then that way, if there's something wrong, if something's missing or out of balance or whatever, we have a way to go back and check our original record into the business. But also in there, as we will learn later, there'll be a reference to source documents, so we can go back to purchase orders and sales slips and memos and stuff like that to confirm all those details if necessary. The entry that starts, now the opening entry, as we talked about a little bit before, this is a very special sort of title, and it goes to literally the very first journal entry that is used to open up a business. It sets the starting financial of the business, and as I said, it only ever happens once, ever. And this is literally the only time that you can use page one on a general journal page. All right, so that concludes the theory part of this. We're next going to do the guided practice. So you're going to need the guided practice video as well as the guided practice file, spreadsheet file in order to complete it.